Have you ever checked your bank account and thought, I'm actually doing okay with money? Your bills are paid, your lifestyle looks normal, nothing feels out of control. But at the same time, your credit card balance never really goes away. It just kind of sits there. Sometimes it shrinks a little, sometimes it grows again. And slowly, almost quietly, it becomes part of your financial life. This is the credit card illusion, and millions of people across the United States and Europe live inside it without realizing it. Let's imagine a pretty typical situation. A 27-year-old professional, maybe working in tech support, marketing, accounting, or healthcare. They make around $65,000 a year. After taxes and deductions, their take-home pay is roughly $3,800 per month. Their expenses look pretty normal. Rent might be $1,400, car payment $350, insurance $140, groceries $400, utilities and internet around $180, student loan payments about $250. Right away, about $2,720 is already spoken for. Then there's life. Dinner with friends, streaming services, a couple Uber rides, a new pair of shoes, maybe a quick weekend trip. Nothing crazy, just normal middle-class spending. Some of it goes on the debit card, but a lot of it goes on the credit card. At the end of the month, the credit card bill shows $2,000. That number feels manageable because the statement doesn't demand $2,000. It asks for something much smaller, maybe $80 as the minimum payment. And that's where the illusion begins. The brain doesn't react strongly to $80. $80 feels like nothing. You pay it, the account stays in good standing, and life moves on. But something important just happened. The remaining $1,920 didn't disappear. It quietly turned into debt, with interest. Most credit cards charge around 20% interest per year. That means the balance starts growing in the background. Let's run some simple numbers. If someone carries a $2,000 balance at around 20% interest, they might pay roughly $400 in interest over time just to clear it. And that's assuming they stop adding new charges. But in real life, most people don't. The next month comes, more groceries, more dinners, another small trip, another $600 or $700 lands on the card. Now the balance is closer to $2,600. Again, the minimum payment looks small, maybe $95 this time. Still manageable, still not scary. And that's exactly why the system works so well. Credit cards separate spending from consequences. When you pay with cash or debit, the money disappears immediately. Your brain feels the loss right away. But with credit cards, the pain gets delayed. The purchase feels easy. The bill comes weeks later. And the minimum payment makes the situation look smaller than it actually is. Psychologists sometimes call this payment decoupling. The brain experiences the reward now and the cost later. Humans are not great at thinking about later. We are wired for the present moment. That's why someone can feel financially stable while quietly building thousands of dollars in high-interest debt. From the outside, their life looks fine. They have a job, they pay their bills, they still go out sometimes. Nothing feels like a financial emergency. But mathematically, something very different is happening. Let's say someone keeps an average $4,000 balance on their credit card. At around 20% interest, that's roughly $800 a year just in interest, not paying down the card, just maintaining the balance. $800 quietly leaving their future every single year. Over 10 years, that's $8,000 gone, and that's before counting any new debt. What makes this even trickier is that many credit card users are responsible people. They're not reckless spenders. They're not blowing money at casinos or buying luxury watches. They're just smoothing out normal life. Groceries one week, gas the next, a flight to visit family, a new laptop for work. Individually, every purchase makes sense, but collectively, the balance becomes permanent. The card stops being a payment tool, it becomes a financial background noise, something that's always there. Financially thoughtful people tend to approach credit cards differently. They still use them, sometimes a lot, but mentally they treat the card like a delayed debit card. If the money isn't already sitting in their bank account, the purchase doesn't happen because they understand a quiet truth about credit. Credit is not extra money, it's future money being spent early. And when that future money starts collecting interest, it becomes extremely expensive money. The goal isn't to fear credit cards. They're convenient, they offer protection, sometimes they offer rewards. But the moment the balance becomes something that quietly rolls over month after month, the illusion begins. Life still feels normal, your paycheck still arrives, your lifestyle still works, but part of your future income is now permanently reserved for yesterday's spending. And most people don't notice that shift until the numbers get big. The credit card illusion doesn't ruin finances overnight. It works slowly, quietly, month after month. If this video helped you see credit cards a little more clearly, consider subscribing for more calm and realistic conversations about money.